On 31st January, just a day ahead of tabling the interim budget, the Reserve Bank of India dealt a big blow to Paytm Payments Bank for persistent non-compliances and continued material supervisory concerns. The central bank barred its payments bank from undertaking any banking activity. It cannot take fresh deposits. It cannot undertake credit transactions in customer accounts. There will be no wallet top-ups, etc. The deadline has now been extended to March 15 from the earlier February 29. The RBI exercised its power under Section 35A of the Banking Regulation Act 1949 to act against Paytm. But what is it? Banking Regulation Act 1949 gives RBI the power to regulate and supervise public and private sector banks. Under the provisions of the Banking Regulation Act 1949, it can inspect the bank and its books and accounts, examine on oath any director or other officer of the bank, cause a scrutiny to be made of the affairs of the bank, give directions to secure the proper management of the bank, call for any information of account details, determine the policy in relation to advances by the bank, direct special audit of the bank, direct the bank to initiate insolvency resolution process in respect of a default under the provisions of Insolvency and Bankruptcy Code 2016. Meanwhile, Section 35A empowers RBI to act in the public interest or in the interest of banking policy. It empowers the banking regulator to prevent the affairs of any banking company being conducted in a manner detrimental to the interests of the depositors or in a manner prejudicial to the interest of the banking company. It can also give directions to secure the proper management of any banking company, and the company shall be bound to comply with such directions. RBI also has the power to modify or cancel any direction issued under Section 35A. Like on 16th February, it extended the deadline for imposing certain business restrictions on Paytm Payments Bank by reissuing modified directions under Section 35A of the Banking Regulation Acts 1949. But the directions issued under Section 35A by the Reserve Bank of India are not the final word. They can be challenged if found to be legally questionable. A master circular issued under Section 35A by the RBI in 2016 called Frauds, Classification and Reporting allowed banks to classify accounts of willful defaulters as fraudulent without hearing them. This circular was challenged in the Telangana High Court, which held in 2020 that borrowers would be heard before the classification of an account as fraudulent, following which SBI and the RBI then moved the Supreme Court against this order. The Apex Court upheld the judgment.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.